What's up, traders? It's Mr. Andrae here, founder of Comfortable Profits Academy with over 15 years of experience in the stock and options trading. Now, through my very own techniques and experiences, I've generated over 100K in a single month trading options. Now, don't be concerned with that so much. Don't be concerned with that. One thing to understand is the importance of consistency. Anyone can be lucky. Consistency is for the serious traders and investors. Now, my goal is to help traders understand the market at a deeper level and improve your very own long-term success. Ever wonder why your trades don't play out the way you expect? Maybe you see a stock move in a certain direction. You enter, and before you know it, your position is in the red. Or you set a stop loss thinking you're managing risk, but the market triggers it out of nowhere. It's frustrating, and it can make you feel like the market is working against you. But here's the thing. Successful trading is not just about picking the right stock or guessing movements. If you don't have a clear understanding of market structure, why prices move, how orders get filled, and what is really happening behind the scenes, you will always get lost in the chaos. So let's simplify. Let's look through the correct lens when entering the market. That lens begins with the structure. So today I'm going to break down the stock market structure from the IPOs to market makers so you can see the full picture and start trading more effectively. Now, understanding the structure puts you in a position of control. Not reactive, but proactive. The very knowledge that I'm sharing with you, I've learned from the greats of John Carter, Charlie Munger, Warren Buffett, and some of their philosophies and the things I've learned, I'll be teaching to you. I'll be sharing it to develop you into a profitable stock trader. Now, in about 10 minutes, I'll explain to you the edge that encourages every price change, every decision, and every opportunity in the stock market. When you know how it all connects, your trading decisions become more sharper and more refined, which leads to more profits. So let's break it down. Let's take our time and let's do it. The market's hidden structure, the advantage. Now, how the market works. When I first started off, I didn't know how it worked. It took a lot of mistakes. It took a lot of things, a lot of lessons for me to keep asking questions that brought me to where I'm at today. And let me tell you, when you understand both sides of the coin, both sides of the business, both sides of investing, it makes it that much more easier. You know, it's like flipping a coin, understanding there's two sides to the coin. If you only thought there was one side to the coin, or you only saw one side of the perspective, it would change once you see the other side, once you see that there's two sides. There's two sides to the game. So let's break down markets' hidden structure. It starts off with the IPO process. All right. Let's say a company decides to go public. IPO means initial public offering. A company ABC or company Apple or whatever the case may be decides to go public. Why? Because they want to expand their company. They want to introduce their shares to the public market. So the first thing they do is approach an investment bank. The investment bank evaluates that company ABC and evaluates what their shares could be traded at publicly. Of course, they have the media and the news and analysts and everything that's pretty much brewing up this new company. Now, this all comes from the investment bank. So the company presents themselves to the investment bank. The investment bank buys shares from the company at a discounted price. All right. So they buy shares at a discounted price, a number of shares, and then they in turn introduce the shares. The investment bank in turn introduce those shares to a number of brokerage firms or trading firms or brokerage companies. So now the brokerage company is introduced, the investment bank introduced their shares to the brokerage company, and then the brokerage company looks at the number of shares and they release those shares to the market maker, and the market maker sells those shares at price to the public. So the market makers, they're like the realtors. They're the ones that deals with the public, with the exchange. And the market makers, they are to specialize in price action. So what they do is they take the orders, the shares, and they create liquidity so that the shares can be filled. But really they're supposed to specialize in price action. So what that means is they are able to fill the market, fill the public, and determine the ranges of where the public is valuing a certain price or valuing a certain share price. All right. So the way that works, I'll break it down real quick. The company decides to go public. They want to expand their company. So guess what? They go with the investment bank. The investment bank in turn evaluates the company, buys the company shares, a certain number of outstanding shares. They buy it at a discounted price. They take that discounted price and they sell a number of shares to the brokerage companies. Now the brokerage companies, they sell it to them. They could buy it at price. Brokerage company have a choice. They could buy it at price, or they could just fulfill the shares at price. They could buy their own shares, or they could just exchange it, because the brokerage companies make their money off of transactions. All right. So the investment bank introduced their share, a number of shares to brokerage firms and companies to trade to the public. The brokerage firms and companies introduce those shares, or whatever the plan is, to the market makers. The market makers introduce those shares to the public, and they are to specialize in liquidity and filling their orders with buy and ask. So let's break it down just a little further, just in case you didn't get it. Now, unlocking the trader's edge, the structure of the market. Okay, when you understand the structure of the market, this does unlock your perspective. Institutional orders. Now, this is how the market is traded every day. This is what the market is. Once a company has gone public and it is out with the brokerage firms and trading firms, now this is your everyday cycle of the market. This is how it's structured. You have institutional orders. Number one, large order requests from hedge funds and other institutions. Now what they do, they have large order forms and order requests that they pass on to brokerage companies or brokerage firms. Brokerage firms would be like Charles Schwab, TD Ameritrade, Robinhood, just to name a few of the popular ones, or maybe it's different depending on where you're at. But brokerage firms is the platform. They are the liaison that allows the public to initiate the stock market. All right. So large institutions, they may have hundreds or thousands or whatever shares or buys or orders that they will introduce to the brokerage firm, just like us. We do level 2 trading. So every time we click that mouse, we are sending a signal to the brokerage firm to initiate a transaction. It's the same thing for large institutions. So starting from the top, large institutions, they have their requests and their orders, and they pass those orders to the brokerage firms. Now the brokerage firm has an obligation to fill those large orders coming from large institutions. So let's say they have 1,000 or hundreds of thousands or whatever the case may be, certain shares that they want to fill at certain prices. So that brokerage firm would then trust and turn to the market maker to provide a liquidity and influence price movements based on supply and demand. So what that means is the market maker creates the liquidity through price movement, but he has an agenda. It's almost like this. The market maker is like the realtor that's selling you the home. The realtor already knows what the home is worth and what he wants to make out of it and how much he wants to profit from it, what percentage he get from selling the home. So he has his own agenda, and he knows the other side of the game. He knows that the house is worth this much, but you have the family that's purchasing the home. They want to purchase the home for the best price. So the realtor has to disguise, in a sense, not disguise, but he wants to maximize the deal. He wants to maximize the deal. Same thing with market makers. Market makers know what large institutionals, what their orders are, what orders need to be filled, what strike prices need to be fulfilled, what share prices, what orders are lingering in what you call the dark pool, or either first-hand orders from large institutions. Some market makers even can make deals with institutions themselves. But the point is this: market makers control price movement. Now, if large institutions are putting in orders to make money in the stock market, who are they making money from? Now, let me ask you again. If large institutions are putting in money or putting in orders to make money, hedge funds and other investment banks and stuff, they're putting in orders to make money. Where do they get the money from? Who are they making it from? The retail traders, which moves me to my next step. So the market maker, essentially what he's doing is he's filling out the retail traders, which is the bottom of the list. Because every time a retail trader wins money, then the brokerage firm, in all essence, has to cover those orders. All right. So I'm gonna break this all down. Make sure we get it. Make sure we got it. So the market maker's job is to provide liquidity and influence price movement based on supply and demand. So he's to fill out the market, fill out the retail traders, where they trading at, and he is to use that to his advantage to create liquidity and fill large orders. So of course the priority of the brokerage firm or the brokerage company, they're not against us, but their priority is the institutions, the large orders. That's their priority. And then you have us, the retail traders, individuals like you and me, driving small price fluctuations from the bottom. So what happens is, from our perspective, we're trying to determine where a stock is going. But the market maker already knows where the stock is going. He wants to go ahead and he wants to fill out the market to see where hot zones and hot spots at, so that he can fill the large request orders from up top. So typically that's how this goes. It goes from large institutional requests to the brokerage firms and trading platforms. And sometimes the brokerage firms may have their own interest in buying shares in-house as well. They can also buy shares in-house at price and sell it to the public as well. Of course, they could do that. And then the brokerage firm would trust the market makers to make it happen. And of course, the market makers got to make it happen because they're pretty much hired by brokerage firms. And if they don't make it happen, then the brokerage firm won't do business with them. So typically the market maker needs to make it happen. They need to get rid of those orders, those large orders, and keep the market liquid. So then that market maker will essentially control the liquidity and the supply and demand based on price movement. And then comes the retail traders, which is pretty much the bottom of the totem pole, which is best case scenario for a brokerage firm is retailers lose their money. Worst case is if you're making a lot of money, because if you're making money, somebody got to front that charge, that buy, that supply and demand, that bid and that ask. So that's how the stock market is structured. Now, to trade with confidence and clarity, always break it down in threes like a diamond: knowledge, precision, and control. You see, knowledge, it deepens your understanding of market dynamics. You see, you have to feel the market. You have to feel it. You know what I'm saying? And you can only feel the market through knowledge. Precision. Make informed decisions with a clear picture of the market structure. You have to pay attention. Pay attention and trust what you see. Pay attention and trust what you see. And control. Find the edge over the market with a strategic approach. You see, when you understand the big picture, it gives you leverage. Let me give you a quick example. Now, let's say you see somebody driving in the car. They're going north, and then you see them get off on the exit, and then you see them go to a gas station. Then you see them jump back in the car and get back on the exit, and then you see them go south. They got to use the restroom. You see them stop at a restaurant. Then you see them go east to go get some food, to go to Chick-fil-A. And then you see them get back on the highway going north. In your mind, you might be thinking like, man, this person don't know where he's going. Like, why is he going south, east, west? He's going all these different directions. What's going on? But let's say that same individual. I'm from Miami. You know what I'm saying? Let's say that same individual, you knew he was going to Orlando Disney World. So the big picture is he's going to Orlando Disney World. So the fact that he's going south to go get something to eat, or east to stop by the bathroom, or getting off on the exit, it all makes sense because you're looking at it from a bigger picture. When you see the bigger picture of the stock market, you understand the destination. And when you understand the destination, you're more precise, your precision, your perception, you're more effective, and your trades are more accurate. Now you have a clear understanding of how the market operates beneath the surface. This knowledge isn't just about information, it's a tool. The more you understand how stocks move through the system, the more effective your decisions become. Trading doesn't have to be complicated. With the right knowledge, things start to make sense. And when it makes sense, your approach to the market is more successful. If this was helpful, go ahead and subscribe and continue to sharpen your skills as I will introduce professional knowledge to make you more prosperous. Blessings.